Dividend growth investing is one of the best ways to make passive income in the stock market today. It's a great way to build income as you get older and is especially as you get closer to retirement. In today's video, I'm going to be going over my top 7 financial stocks that have raised their dividends in 2020. Now, financial stocks represent a large chunk of the TSX index. And when you're dealing with dividend growth stocks, it's important to focus on these two things: consistent dividends and a history of increasing dividends over time. These are the things you want to look for in a company when investing for dividend growth. When it comes to dividend growth investing, it's starting to become really popular because GIC rates and bond rates are at an all-time low. So naturally, investors are looking for different ways to invest their money and earn more passive income. And here comes dividend growth investing. The best place, in my opinion, to start looking for dividend growth stocks is the Dividend Aristocrats list. These are companies that all have a nice long history of increasing their dividends over time, which is very important for dividend growth investing. In the first quarter of 2020, over 40 Canadian dividend stocks increased their dividend. Now keep in mind, it's important that all these companies raised their dividends pre-market crash. So that is something to take into consideration. But I do think that all of the companies on this list that I'm going to be giving you guys, these top 7 companies, are going to maintain their dividend towards the end of the year. And that's really important because, once again, you want companies that not only raise their dividend but have a strong history of keeping those dividends. Alright, so I'm just going to name these stocks really quickly. I'm going to kind of give you guys some brief information and some brief facts about how they raise their dividends. And then afterwards, when you go through all 7 stocks, I'm going to talk a little bit more about them in greater detail. So the first financial stock we're going to talk about is Canadian Western Bank. So Canadian Western Bank old dividend was 0.28 cents per share, and they've increased it to 0.29 cents per share in the first quarter of 2020. So that is a 3.7% over last year. 3.7% increase over last year. So that's not too shabby. I think Canadian Western Bank is a good investment. In fact, all the Canadian banks are solid investments, I think, especially the big banks. And you'll see on this list, there's actually quite a few banks because the banks are one of the best solid stocks to invest into right now. So next on the list is one of my favorite stocks, and it is TD. So Toronto Dominion Bank is one of my favorite banks, and if you guys have watched some of my previous videos, I talked a lot about TD. In fact, my #1 favorite dividend Canadian stock right now actually is TD. I think they're an amazing company, and I think going into the future, they're going to be one of the best finance stocks, and I think they're going to do a great job of surviving the storm that's going to happen towards over the next couple years in Canada. So their dividend before the raise was sitting at about 0.74 cents, and they raised their dividend all the way to 0.79 cents per share. Now, I know when I go over these dividend increases, it doesn't really sound very much, but I want you guys to think of it in percentages, because when you look at your overall portfolio and all these different shares that you have of a company, those like 5-cent increases or those 2-cent increases, they really add up, especially when you own multiple shares of a company. So my third stock that I'm going to be showing you guys is, once again, another Canadian bank, and that is CIBC. So CIBC has one of the biggest dividend yields out of all the Canadian banks, and once again, like, you're going to start to notice that the Canadian banks they're just all over the place and when it comes to good stocks to invest into, and I think they're one of the best stocks to invest into right now. And CIBC has a current dividend of $1.44, which is crazy, and they increased their dividend to $1.46, which is only a 1.36% increase, which isn't a ton, but their dividend is already pretty high as it is. I think they're sitting at like a 6% or something dividend yield, which is pretty crazy. So it makes kind of sense that they're not going to increase their dividend too much. Would like to see a little bit of growth, but I still think CIBC is a solid company, a solid bank to invest into, and that's why I put them on this list. Next stock on my list is RBC, and I promise you guys, this is the last Canadian bank that I have on this list. RBC's old dividend was $1.05 per share, and they increased it to $1.08 with the new dividend increase. And this ends up being 2.86%, which is almost a 3% increase for RBC. And RBC has been doing pretty okay. This increase is pretty nice, and I think they will probably sustain it towards the end of the year. And I do think RBC is one of the, probably not one of the biggest banks out of all the big banks in Canada to invest into right now. Not the most popular one, but they're definitely a solid pick at the end of the day, and I highly recommend them. So that's all the Canadian banks, all the banks I'm going to recommend in this video. So let's jump on to the last 2 stocks, which once again are insurance and finance-based stocks. So the next company I'm going to talk about is an insurance company called Manulife. Now, Manulife actually has one of the biggest dividend yield increases on the list. In fact, significantly. They had an old dividend of 0.25 cents per share, and they increased their dividend all the way to 0.28 cents per share at the start of the year. It doesn't sound like much, but when you look at it in a percentage, it's actually a 12% increase in 1 year. That is a huge increase for a company to increase their dividend. 12% is crazy. And this is partly due because Manulife has just been exploding in North America. They're an insurance company that has become super popular. I see more and more companies using Manulife as an insurance company and whatnot. In fact, my place of work, where I work part-time, we actually have all our benefits and everything from Manulife. And I see a lot of other companies using them. So they have really good profits for last year and this year. And I think going into the future, they're probably going to be one of the best finance-based stocks coming out of both the Canada and US. My number 6 pick is Canadian General Investments. Their old dividend was at 0.20 cents and their new increase brought it to 0.21 cents, so a 1 cent increase, but that is a 5% increase overall, so once again, not too bad of an increase. Now, Canadian General Investments is a newer company on my watch, and I haven't known them for too long, but when looking up some increases and checking them out on the Dividend Aristocrats list, they look like a pretty solid company to invest into, and they deal with investing, they take people's money, they invest it and do different things like that, they manage money and stuff like that, so they've had some pretty good success, and I think their increase this year is pretty solid. And the last company I'm going to be talking about is a cool little company that's up and coming called goeasy. Now, I never heard about goeasy before doing this video because they're like one of the more up and coming stocks here. But the cool thing about this stock is they have one of the most significant increase is and their earnings have one of the most highest yield earnings, and they're just kind of booming right now. Like they're like kind of like a smaller company just kind of rising up here and having extremely good success over the past couple years. So get this, guys, they had a dividend of 0.31 cents at the start of the year, and they increased it to 45 cents. That is a whopping increase of over 40%. I want to repeat that, an increase of over 40%. That is crazy for one company to increase their dividend up 40% in just 1 year. So I think goeasy is one of those hot stocks right now, and I could see them causing a lot of news in the future and stuff like that. So they're definitely one thing a stock that you want to keep on your watch list, and something you want to kind of keep an eye out going into the future. All right, so that's my 7 financial stock picks in this video. Now I'm going to go talk about some of these different stocks in greater detail. But before I do that, guys, I just want to mention, if you guys are enjoying this video, please be sure to hit that like button and subscribe to the channel if you guys want more investing based content. So before we go any further, let's talk about the big banks just for a second here. So the good news for all Canadian dividend investors is that all of the Canadian banks have all increased their dividends and managed to keep their dividend going into 2020. One of the big questions going into the big market crash and going forward, and especially in the second quarter, was the Canadian banks going to maintain their dividends going forth? And it looks across the paper that all Canadian banks have actually kept their dividend, and going into the future, I think it's probably safe to say that probably the vast majority, if not all of them, will maintain their dividend towards the end of the year, which is really, really good for anybody who is a dividend investor and invested a lot into the Canadian banks. And TD, one of my very favorite stocks, Canadian bank stocks, is actually one of the very few banks that actually maintain their annual dividend increase. TD has increased their dividend over the past 9 years. TD has raised their dividend every single year for the past 9 years. They're almost going on to a 10-year dividend streak. So if they keep their dividend going towards 2020, going into 2021, that's going to mark 10 consecutive years that every single year they raise their dividend. If we're talking about dividend growth stocks, we're talking about TD right there. And last but not least, it's also good to note that TD's dividend increase is average about 10% per year. So not only are they increasing their dividend for a long period of time, they're also increasing it on average by 10% per year. That's pretty significant. And if I haven't already hyped up TD enough in this video, I just also want to say TD has one of the highest earnings in all of the Canadian banks in Canada. And just to put some icing on the cake, they also have one of the lowest payout ratios as well, which basically means that the money that they're paying their dividend investors is actually a very, very small chunk of the overall profit and income that they make. This means that their dividend will most likely be one of the safest and sustainable dividends going into the future. Now, although I talked about a bunch of different Canadian banks in this video, and I think they're all pretty good buys right now, I'd probably say that all those Canadian banks, TD is probably the strongest buy for any dividend investor at this current moment. So now let's talk about Manulife a little bit more detail because I think they're a company that deserves a little bit more attention. So like I mentioned before, Manulife is one of the biggest insurance companies in both the Canada and US. The 12% increase that Manulife increased their dividend by at the start of the year marks their 7th consecutive year in which they increased their dividend, which once again is always a good thing you want to look for when you're investing into dividend growth companies. You want companies that are regularly increasing their dividends so your dividends will grow over time. And I do believe going into towards the end of 2020 and 21 and future years after that, I do believe that Manulife will survive and their profits have been great and they've been doing a great job. So I think out of all the financial companies and a lot of the insurance companies, I think Manulife is actually probably going to be one of the best ones kind of rising towards the end. So my two favorite stock picks out of this entire video, the 7 stocks I talked about, is going to probably be either TD or Manulife. I think both of these companies are solid picks and they really shine above all the other companies that I mentioned here. And of course, before we end this video, let's talk a little bit about GoEasy because they're one of the fastest growing financial stocks in the world right now. The 45 dividend % increase is the highest of all the dividend aristocrats in 2020. So that's important to note. And it's also predicted that most financial companies will suffer losses from the pandemic and whatnot going towards the end of 2020. But GoEasy is one of those rare companies that actually is probably going to report an increase in income. So because of this, I think they're going to be maybe one of the hotter stocks going in towards the end of the year. And I think they probably will be a safe buy and you might want to pick up a couple shares, but I'm not too sure about them yet. I still think they need a little bit more time. Maybe they need to grow a little bit, but if you want to pick a stock that's kind of rising up, GoEasy might be a good dividend growth stock pick for you. So that's it for this video, guys. I hope you guys enjoyed it. Please let me know what you guys think of these 7 financial stocks in the comments below. Let me know what you guys think and feel free to share your thoughts. Hope you guys enjoyed the video. Take care and I'll see you guys later.